Hi and welcome to the Market Alert for Thursday the 4th of June 2015. And in the 5-minute chart you can see the market was fairly quiet until we had the economic news out at just before 1:30 and the ECB comments, etc. And then at 2:30 we see the market being marked down and then turning around and coming back towards the upside. The interesting thing here is at 3 p.m. yesterday we had the ISM manufacturing or non-manufacturing PMI, and it was forecast at 57.1, came out at 55.7. So it came out lower than forecast, and yet again the market then drove up to the 18,150 level. So from the low to the high we've got up 150 points before the market ran out of steam. Now it's generally considered that you've got 150 points in the background, the economic news is bad, there's no professional buying, and the market runs out of steam, and then we get a potential buy signal here with the PTI. But had you have taken this one, it would have resulted in a 16-point loss as the market went sideways. And what I'm doing here is pointing out to you the sort of the logical approach that if you've got a 150-point move already, the volume is dropping off, there's no professional buying even in this bar that drives through the 18,100 level, then you've got to be careful of signals that follow, because the momentum isn't in the market. We then get a potential sell, and given that the figures were lower than forecast, there's no buying, and the market closing back below this level, there's a potential sell here for the quieter part of the session, which turned out to be a reversal, a straight reversal off the no volume up move that we saw in the earlier part of the session there. So the market trading down 20 points to here and down to the next psychological level, which is what we use with the PTIs, around 72 points profit down to the line. Of course you wouldn't have got all of that unless you were very quick on the trigger, but certainly 20 plus points on this trade as the market moved lower. And had you have used a trailing stop of 50, which I've shown before, on the lower highs, you can see there the market stopping out at this level here of 18,079. So certainly about 45-50 points on this trade. So then we get into the quiet part of the session, the market just bouncing back a bit, and then prices coming back up to go above the 18,100 once again. Another PTI which fails to see the market move again. There's no green buying bars as the market goes through, and then prices just drift back and then close back with another PTI to the downside, and then this just taking out the long PTI before the market reverses. And I'll just remove that one and pop that one back in, and this one not making the 20 points because here we've got 2100 before the market actually hits it, and then the spread changes on the ETX site from 1 point to 3 points just after 9. So around the most you're going to get on this trade would be around 14-15 points before the market closed. And then of course this signal here and this one are not valid because this one's too close to the market closing, and this one is after it's actually closed. So in the daily charts you can see yesterday the market moving high. We have actually got a green volume bar for yesterday, but the reason for this is that the volume is been tapering off, and of course the averages have dropped, so this has brought it up, but it does show some sort of buying. But the market coming off the high is generally an indication that prices are weak, and we're seeing this morning where prices are moving down towards these lows again. The 17,898 level is a very important level because it ties in with the 18,000 psychological level that I've been talking about most of this week. In today's news, we've got at 3 p.m. nothing today. All of the news is out beforehand, including interest rates from the UK there, and then just the weekly unemployment claims at 1:30, but nothing at 3 p.m. So the market's going to have to make its own direction based upon the news beforehand there. And finally, in the implied volatility, 1240 for Tuesday. Let's just refresh, see what the market did on Wednesday. 1226, so both dropping there, and also 926 on the historical as well. You can see that dropping off quite sharply now, and we could do with seeing the implied volatility do the same, so we can get a decent correction in this market and get some volatility back into the market, but not too much. It's a fine balance of not having enough and having too much, but at the moment, if the market can move 30 to 40 points following a signal, then we do get to the scalp. But no volatility and too much volatility are an issue with trading. It doesn't matter what the market is, it's the same for all. Right, that's it from me for this morning. I'll see you in tomorrow's edition of the Market Alert. Have a good day, and as ever, thank you for your support and also for watching. I shall see you in the next one.